Let me give a big welcome to all my index traders out there. This is your host, William Boyett. And today I want to talk about another big signal that you can get in the index trading system. Now, I've showed you before about the drawdown signal where a setting will drop 17%. And that's usually a good indicator that the setting is about to rebound and go back up so you can get in and ride it up. And now in this new signal, a very powerful signal, is we're looking for a setting that has already taken off, and it'll tell us which setting is going to take off next so that we can get in on the ground floor and ride it up. So let me go over this briefly, all the different steps you're going to need to do exactly to follow this. So the first thing you need to do is we're going to come down here and we're going to go to the settings monitor. All right, now what we're looking for in the settings monitor is we're looking for a setting that has a 3-month return of 50% or more. Okay, so step one is looking for a 50% return in this 3-month column. Okay, so right now the closest one to that is this 3-1 setting right here. And so what's going to happen is when this hits 50% return, then that means that the next setting in the progression is going to take off next, and that would be the 4-1. So that one will take off until it has a 50% return. So you can see here that's about a 60% gain. So this is a very powerful signal. I call it the ripple effect because it's just like a little rock drops in a pond and it creates a little circle, and that circle grows larger and larger as it spreads out. And so the same thing here. We're looking for a setting that hits 50% in the 3-month column first. That's like the rock hitting the pond. And from there, it starts to spread out in succession. So what follows after 3-1 would be the 4-1. So we would play the 4-1 until it has a 50% return, and then we would go play the 5-1 until it has a 50% return. So we keep playing that ripple as it expands. Okay. Now, step two is this only works in a bullish market, which we are in right now. So if you were to see this, and this says bearish up here, then you would just pass on this. Okay. Step three is we want to come here to your market timing indicator, and we're going to put in the default setting because we want to know what the default setting is, and that will determine which group of settings we're going to use for the ripple effect. So we'll update it, and we can see here that the default setting is a bullish 5-1. So being that it's 5-1, that means the market is favoring longer moves. So we're going to use the settings that monitor the longer moves, which would be the 3-1, 4-1, 5-1, and 6-1. So out of the 6 settings that have a 1 volatility, we're going to use the 4 on the right-hand side, the 4 that monitor the biggest. If the default setting was 2-1, and it was telling us that the market was favoring shorter moves, then we would be using the settings that monitor the shorter moves of 1-1, 2-1, 3-1, and 4-1. When you get to the end of that ripple or succession, for example, if we're doing the 5-1 here, so it is the 3-1, 4-1, 5-1, 6-1. When we get to the end of 6-1, we're going to start again at 3-1. Now, if we were using the shorter moves, when we get to the end at 4-1, we don't go to 5-1. We would start over again at 1-1. So we're basically rotating through these 4 settings. And once we get to the very end, we start over at the beginning, and we just keep going over and over and over again. And in a moment, I'm going to show you when it actually ends. We're going to actually do a live trading here, and I'm going to show you. But for now, step 3 here is now you know which 4 settings that you're going to be using. And so on the settings monitor page, we saw already that 3-1 is getting close. So let's say 3-1 triggers. So that brings us to step 4, because now we're going to start trading the 4-1. So we would come back to our market timing indicator here. We would remove the using default, and we would set this for 4-1. And then we would hit update. Now this is telling us 2 things right here. that now we're going to be able to trade all the alerts of the 4-1 until it gets a 3-month return of 50%. And this brings us to step 5. Now, step 5 is you don't have to check any click for recommendation button or anything like that. Being that the setting is previous setting is up 50%, that's your buy signal right away. And we can see that the 4-1 is going to the upside, which would be TNA. So we would go and buy TNA, and we would start trading the 4-1 until it gets to our 60% setting, our 50% gain. So when this box right here says 50% gain, then we know that the time is over and we move to the next one, which is 5-1. Does that make sense? All right, so now that we've set our timing indicator to the proper setting, that brings us to step number 6. And in this step, what we're going to do is we're going to trade all the alerts from this 4-1 setting until it has a 3-month return in the 50% or greater. And so that's it. Now, once you're done with the, once this has gotten to the 50%, then you just move on to the next setting. And as we saw before, since we're using the default setting of 5-1, so for our ripple effect, we're going to use 3-1, 4-1, 5-1, and 6-1 for our plays. And so right now we would be on 4-1. When that hit 50%, we would go to 5-1. When that hit 50%, we would go to 6-1. When that hit 50%, we would start back over at 3-1. Does that make sense? And remember, we only do this in the bullish markets. So there's only been 3 periods of the bullish market, March 15th, 2011 to December 17th. And then again from July 20th, 2016 to March 10th. And the third one is the one that we are in now, October 6th, 2020 up until today. So there you have our 3 bullish periods. And now I'm going to show you the returns that you would have gotten following this signal and just trading it as I have explained here. All right, so let's put this into action. And we're going to start with this bullish period right here. On July 20th, 2016. So we just switched to the bullish 5-1 default setting. So that tells me that the market is favoring longer moves. So what we're going to do is we're going to focus on these 4 settings: 3-1, 4-1, 5-1, 6-1. And here I have a table. This is a 3-month return. So this is from 4/20/16 to 7/20/16. So that's 3 months. And this is what each of these settings had achieved. And then on this date in 7/20/2016, you would have seen these 4 returns right here on the 3-1, 4-1, 5-1, and 6-1. So those returns that we're seeing here would have appeared on there, okay, on that page on that day. And so this is just basically a little back testing tool that I have, and it's going to give me the 3 months return of every day. So July 20th, July 21, July 22. So now with the ripple effect, we're looking at the 3-month return. We want to see which one of these 4 settings is going to hit a 50% return first. That is going to trigger us to start trading. So as we move down, I'm still scrolling, still nothing. All right, now here we go. We have a 50% return that occurred on 4/17/2018. Now remember, these are settings 3-1, 4-1, 5-1, and 6-1. So both of these triggered the 50% return. So the next one that should take off would be, we go to the end, we wrap around to this side, is the 3-1. So what you would do on 4/17/2018 is see what 3-1 is in. You would go buy that ETF, put your market timing indicator to start trading 3-1, and just follow all of the signals until you see a 50% return over here. Does that make sense? So let's go down and play it out and see how it works. Right now we're in the 3-1. We're waiting to find a 50% return. Okay, and it occurred right here on 1/4/2019. So if we look at our returns, remember we were in 3-1. We started on 4/17/2018. We traded the 3-1 all the way up to 1/4/2019. So it was like 9 months. And that setting went up 127%. That's what we would have made by following those signals, 127%. So now that this one is triggered, we have to go to the next one in line, which would be the 4-1. Now when we look on here, we see that the 4-1 is already at 50%. So we skip that and we go to the 5-1. And the 5-1, you see, is only going to trade it for 2 days. We're going to go from 1/4/2019 to 1/8/2019. So for 2 days. And on our result page, you see that 1/4/19 to 1/8/2019. Just those 2 trading days. It seems it occurred over a weekend, so there's 4 days here, but it was 2 trading days. We made 9.86%. So now that the 5-1 has hit 50%, we go to the 6-1. And we're going to start trading it on 1/8/2019. And we will stay in it till 1/18, and we're going to end up with a 12% return. So let's take a look at that. So here we are on 1/8/2019. We're getting into the 6-1, which is the very last column on the right. And bam, we hit the 1/18/2019 right here. And now we're done. We're done with this trade. So there you go. We made 12% there. Now, once all of them, now we're supposed to recycle back, remember? But they're all at 50%. So now the trading is over. Now you're done. There's no more trades. What we're going to look for next is for all of these to go below 50%. Okay? And then that will trigger another trade. So let's take a look. Now they're all below 50%. So now the whole thing resets and restarts. Now we're looking for another setting to hit 50%. And if we go forward, you'll see that it has never happened. And on 3/9/2020, we went to the bearish settings because you see everything was doing really bad. We have started to go into that bear market where the S&P dropped 36% shortly after. And so that's what happened here. So that was the play. So in this 4 years, we had these 3 trades. It ran up 179%. So we had those 3 trades. Now you see there's 2 other trades that also occurred during this period. And you may remember when we were scrolling through here. Okay, we're going to come all the way back to the top again and start over because I wanted to show you this. Okay, we came here, we got that 50%, so we started on the 3-1 over here. And while we were waiting for that 3-1 to have a 50% return, you're going to notice another one popped up. Another drop of water fell into the bucket and started a second ripple. Okay, does that make sense? So we have one portfolio trading this ripple over here, which is in 3-1, and now the 4-1 drops. So that means we now go to 5-1. So we're going to put 5-1 into our market timing indicator. We find out what 5-1 is in, we buy it, and we start trading it also until it makes a new high. And we come down here and it made a new high on 7/9/2000. We trade it till it makes a 50% gain, and it did that on 7/9/2018. So you can see we've accounted for that here, 6/20/18 to 7/9/2018, and in that time period it made 11.19%. Okay, so now that the 5-1 is hit, now it's time to trade the 6-1 again. All right, now we're going to wait for the 6-1 to hit a 50% return, and then we come down here and finally the 6-1 hits on 1/18. So we have accounted for that here, 7/9/2018 to 1/18/2019, and that one made a 50.57% return. So basically, there were 2 trading periods that we had in the bull market of these 4 years or 3.5 years. We had 179% gain up here, and this one produced a 67.42. We were in the markets maybe, that was only, 6 months for 67%. We were in the market up here for about 9 months for 179%. So this doesn't happen often, but when you do see this ripple effect, that means some big gains are coming right now. So where are we now? Let's go and move forward. All right, so we know the latest bullish trend, bullish 5-1 here, started on October 6, 2020. So let's see where we are today and what has happened since then. So here we are at 10/6/2020. We're starting off. We're using again 3-1, 4-1, 5-1, 6-1. These are all the settings that monitor the longer move in the market. And now we're looking for an occurrence of a 50% gain. And we will see it happen right here on 11/6/2020. The 5-1 triggered, which means we now go into the 6-1. And the 6-1 will trigger the very next day. Again, there was a weekend, but it was only one trading day. So after the 6-1 triggered, we're going to go into the 3-1, which then triggers the next day on 11/10, sending us into the 4-1, which then triggers on 11/16. So we had a lot of action. Let's see what happened there. So as you see, the 6-1 was here 11/6/2020. Over the weekend in 2 days it triggered. We were only in there. We made 11% in 3 days, and then we went to the 3-1 on 11/9. We were in that one day. We made 5.36%. We went over to the 4-1. We traded that one for 6 days, made 6.53%, and then we cashed out because we cashed out right here. Remember what I said? When they're all at 50%. That's when it stops. And so now we're done. We're waiting for all of these settings to go back below 50% and reset, and then we wait for that 50% again. Finally, everything cooled off on 3/22, which is why for the last 2 months our 5-1 has not done well. But it's expected. Nobody can keep up those fantastic gains. But anyway, let's get back to our ripple effect. Now that everything is cooled off, it's now time to wait for a 50% return. And bam, we got the first one right here on 4/20/21. Now this is the 3-1. It hit the 50% return. So now on 4/20/21, you start trading the 4-1 return. And we wait for it to hit 50%. And as you see, it's down to a -12 right now. And if we look at the results, we started on 4/20. We're still in this one today. We're down 18.38% as of yesterday. It made a little bit of money today on May 3rd. It got a little bit of that back. This could be a fantastic opportunity to be making some money right now, because you're going to need to trade this 4-1 until there is a 3-month return of 50%. And as I showed you here, the 4-1 is currently at a -12. So to get to 50%, it has to go up 60%. So there could be a big opportunity for money to be made right here. So what you would do then is, if you wanted to get in on this ripple effect, set your market timing indicator for 4-1, start trading all the signals until this says 50% over here. You can see that it's in TNA right now, so you just go out and buy TNA right away, and you can start trading this, and you could actually beat the system because it's down 18%. And so if it should go back up, as we saw so far, we've never had a losing trade yet. So that one should rebound unless it's going to be the first one of its kind. So anyway, there's the ripple effect. If you have any questions, please feel free to leave them below, and I'll be happy to answer all those questions for you. And good luck on this, and let's hope we can all make some big gains on this ripple effect.